We got the fresh statistics from Treb this morning about the residential real estate market in GTA, Greater Toronto Area, about the month of June, comparing the pricing direction, the sales volume, the rental statistics from last year as well as from the previous month. So in this video, we're going to cover that. So let's go. Alright, so if you're new to my channel, my name is Yasin Nizami and I make these videos to educate you as a common person about real estate market in Canada, some macroeconomics, some money matters, some financial knowledge, how the money works, how the financial system works, so that you can make an educated decision about your financial well-being. So if you want to learn more, don't forget to hit subscribe and share this with your friends and families as well. So let's get back to our topic. So this morning we got the fresh statistics from TREB, the Toronto Real Estate Board, about the GTA housing market statistics from the month of June. So it's comparing the month of June of 2022 with last year of June 2021, as well as some seasonally adjusted comparison between June and the previous month, May as well. What you're seeing right now is the residential total transactions, so total amount of transaction that has gone through TREB system. Particularly all the GTA and the suburban GTA housing are also listed on TREB. So you can consider that this is representing the entire GTA market. So you can see a 41% reduction in terms of the sales volume compared to last year, which pretty much we are already observing on grounds. And from a month-to-month comparison as well, we can see it is still slowing down. So compared to May, 4.7% reduction in sales volume in month of June. From average selling pricing comparison perspective, you can see the year over year is still showing you 5.3%, but it's a little bit misleading because what we have seen in month of June last year, the pricing was still climbing up. So it went all the way up to its peak value at the end of 2021 as well as to January 2022 and February timeframe. This is where the market went to its peak, and then it started declining from that point onwards. So you can see the month over month comparison from the month of May, the price has gone down 3%, and we are seeing this is going to continue as the Bank of Canada raising rates and tightening the monetary conditions. From a total listing perspective, there's no major change on the listing perspective. I think this is the main difference between comparing this time of slowdown in the market compared to 2017. In 2017, we saw a massive influx of listings in the market, which completely killed the momentum. This time, we're not seeing that massive influx of listings. So even pricing are coming down because the pricing has gone up significantly. And from that point onwards, because of the monetary condition, we're seeing the prices are coming down. But the listing is the low listing is providing its support at the bottom. So you can see the SLNR, the sales to listing ratio, is also reduced minus 28%, which means the listings are taking time. That is also reflected in the days of the market statistics, 41% increase in the days of the market. So the properties are taking more time, it's taking longer compared to last year in order to get sold. If you look at the condo statistics, you can see the condominium sales also impacted, but it's not significantly impacted as we saw in the single family homes category. So minus 15.6% reduction in the sales volume. And then if you look at the listing level, again, no major difference in terms of listing level. And the days on the market is surprising. So 47% reduction in the days on the market. If you remember, last year, condos were taking longer to get sold compared to single family homes. Now this trend is reversed. So condos are taking less time compared to single family homes to get sold. So 47% reduction in the days on the market compared to last year. And if you look at the rental statistics, the amount of transactions are also reduced, 23% reduction compared to last year in terms of the rental transactions. And the main reason here is we don't have enough inventory for rentals as well. So you can look at the total new listings, 42% reduction in total new listings coming into the market for rentals. And if you have low listings, less supply, then of course the demand will shoot up the price, and that's why we are seeing 17.9% increased rent compared to last year. If you have been watching my videos previously, I think I've talked about this previously, that when you have slowdown in the market, that means the investors will not be purchasing new resale properties and will not be converting into rental properties anymore, because rental also comes from investors, right? So investors buy these properties to be able to rent out to tenants. So if that transaction volume is getting slowed down, that means no new inventory coming from rental perspective, and that's what we're seeing here. So the inventory levels are lower compared to last year, which of course bring the rental prices up. So and this is what we're seeing on grounds as well. The rentals are going crazy this time because we don't have enough inventory for rentals either. And I think this will continue throughout this year because the monetary conditions is much tighter. The rates are going up. The qualification for mortgage is getting difficult. So the buyer sentiment will shift from buying single family homes towards a cheaper alternative, which is condos, right? So you'll see the condo markets will get some traction going forward compared to the expensive properties like single family homes, like townhomes, semi-detached and detached. So that will be further shown throughout this year as the monetary conditions get further tightened, because the rates are going up. The lending criteria will also get tightened as well. So I think more to see as we get along throughout this year and then the next year as well, until such time when things start getting easier again from monetary condition perspective. So that's all I have for you in this video. And if you have some comments, put your comments down below and share with me. And don't forget to subscribe and share this with your friends and families as well, because that's how I get support to run this channel for you guys. So I'll see you in the next video. Take care.